What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's traded in the U.S. stock market. So make sure you hit that like button if you enjoyed this video. Really helps the channel grow. Appreciate those who continue to tune in. We enjoy your company and the comments that we are able to respond to on our videos. If you haven't already, make sure you hit that subscribe and notification button. That way you're alerted to when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos like tonight, they focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings, or what people call leaps. So if you want a deeper dive into exactly how we set up our charts, make sure you check out the bonus content on our YouTube page. We do a deeper dive in a couple of videos on exactly how we set up our charts, how we identify the levels that we use, the broadening formations, the color coding that we have for different time frames, things of that nature. So make sure you check out the bonus content on our YouTube page as well. And for more information about the strat, free information, for a quick PDF in the description of this video. That way you can familiarize yourself if you're not already familiar with the strat. So I do encourage you to watch the full video, because along with the triggers and targets, we give some pretty good insight into the price action on all time frames. So let's go ahead and take a look at the agenda for today. We will first recap the price action from Friday, December 5th. Then we will zoom out like we always do and take a look at the week, month, quarter, and year charts as well. Make sure we are level set and not too locked in on a short-term time frame. Then we will take a look at the market maker's expected move for the coming week of December 12th. And finally, we'll zoom back in, set our 4-hour markers, the triggers and targets for Monday, December 8th, along with the full week of December 12th. And then we'll do a quick review of the triggers and targets for the month, quarter, and year. All right, so let's take a look at the charts and the intraday price action. Like we normally do, we start out on the 5-minute. It is how we use our proven and repeatable strategy in the beginning of the day, when price first opens up, to either get an early scalp or get an early entry into the direction of that the price action is going to trend for that day. So if you're not familiar with this channel, the proven strategy is pretty simple. You look for the opening print or the first traded price of the day, and you want to watch price action. If you get higher lows at or above the opening print level, you want to look to get into calls. If you get lower highs below opening print level, you want to look to get into puts. It's pretty simple. The targets for those entries, of course, to the upside are going to be overnight high and previous high a day. Whichever one comes first, it doesn't matter, but those are the targets. And to the downside, it's the overnight low and previous low a day. Again, order doesn't matter, just those are the targets. Once you reach those levels, if price continues to move in that direction, then obviously we've got triggers and targets on the 4-hour chart and the day chart, things of that nature that you can then start to look at. But for the proven and repeatable strategy, early in the morning, that doesn't have to be right at open. It can be an hour into the day, but you want to watch for that higher low to get into calls, and you want to look for lower highs to get into puts. So looking at Friday's price action, we can see we got the open here, a very good push up in the morning. The first 5-minute candle, and you can see that it rejected at the market maker's expected move high for Friday. Again, if you're not familiar with the market maker's expected move high and low, make sure you continue to watch this video, where we'll go into deeper information about how to obtain those levels. But continuing with Friday's price action, right, we pushed up through those levels of resistance that we talked about, the 50% level of last year, 2024, and also this 138.2 fib extension of the October range. So we want to continue to maintain our focus on those levels. We talked about previously, we looked to the left on the chart and showed how many times this has been support and resistance. So although it did shoot through it in that first 5-minute candle, you can see it rejected off of market makers expected move high and push back down to get that bounce and that confirmation that it was going to be a level of support. So we did grab calls here for the 12th, and things are looking good pretty early on. We did hit this 150 fib extension of that October range, so you can see how those are still coming into play, and then push down, right, to a point where we basically had to stop out, right? We used the was 50% level of 2024. Sorry for the brain fart. Looking for it to bounce there. It did hammer up and push up again, but it made a lower high. And at that point, once price breached the low of this candle, creating this as locking this in as a lower high, we went ahead and exited the position. Small loss, not too big of a deal. That happens sometimes, but that's just the way the cookie crumbles. And you can see how Friday was just basically flat at that after that point. So we did get a lower high, lower low. So it appeared as though we were going to start a downtrend, but then we pushed up, made this basically equal high and then equal low. So at that point, it's like, okay, we're probably just going to be ranging for the day. If you looked at the internals, those were showing basically ranging. Everything was close to the zero line. So there wasn't a whole lot of action to be had, and we basically just watched price for the rest of the day. I don't know, even if you were a super scalper on like the 1 minute, there were a couple of chances maybe where you could got some money, but other than that, the magnitude wasn't very much. You can see, again, we talked about market makers expected move high is not an end-all be-all. Price action doesn't need to end there. It doesn't need to reject or move sideways there, but it is a point of inflection. There's a reason why market makers have it. Comes down to basically open interest on the options chain, but just really bounced in between last year's 50% level and that market makers expected move high for the whole day. You did get a little bit of a sell-off at the end of the day. Nothing real crazy though, basically just normal Friday sell-off action. So pretty boring day on Friday, frankly. We had the one and done, slight loss, no big deal. We were definitely green on the week. Only two losing positions this week, so for the proven and repeatable strategy in the morning. So that is we're happy about that. We did have a slight gap up here, so there is a little bit of a gap left over from Friday. So we'll need to continue to watch that on Monday when we open. But from an intraday perspective, not a whole lot going on. If we look at things, let's just go to the 4-hour chart real quick, because the 4-hour did maintain its uptrend, right? So we can see, let's bring in a little bit more here, make this bigger for everyone. So we can see here, we talked about how we had these, the solid higher low to begin this uptrend, right? We went lower high, solid higher low, and then higher high. So that started the uptrend, but we talked about how we got these soft higher lows here, and we were really looking for a more concrete or a solid higher low in the form of a 2 down then 2 up, right? And that's what we got on Thursday. We got that 2 down, and then Friday we opened with the slight gap up and went 2 up. So continuing this uptrend on the 4-hour with the higher low, higher high. One thing we do need to continue to, well, not one thing, a couple things we need to continue to keep an eye on. It looks like we've wicked off of this weekly broadening formation, basically to the cent. But the main thing is, the weekly broadening formation in last year's 50% level. This is where they intersect. So we knew it's going to be a difficult point to break through. Again, when we look to the left, we can see it was resistance. A little bit of resistance intraday, popped above, tried to find support, but really fell back through resistance. This is basically resistance as well. So this is a very strong resistance level. You can see, obviously, we poked through it in the morning, but we pulled back below it or pulled back into and closed below it by the end of the day on Friday. So is this going to be another higher low? Are we going to possibly push down even further on Monday? If we do, again, it's not that big of a deal as long as we're staying above Thursday's low, which is 44.44, right? Because then at least we're maintaining that higher low. If we do go below this 44, again, it's also not that big of a deal because we could just be creating a broadening formation here. Like, let's go and bring this here. So we went high to higher high. Maybe this low comes down to, maybe we make, we poke through this this 100% fib of the April bull flag, right? Maybe we poke through it and then hammer back up, and now we've got a broadening formation, right? So could just indicate sideways action or just broadening of the price, right? So not that big of a deal even if we do make the lower low on the 4 hour, because if we take a look at the day, there we go. We have not had our concrete higher low, right? We had the soft higher low here, but we've just been making higher highs from a day perspective every day. So we haven't had that pullback. And if you take a look at the, just the candle structure from the last 2 days, we have Thursday as an inside candle, and Friday is, I won't call it a failed 2 up because, it didn't close red. It's a doji. It's not like we had a solid, some body to it, pushing down further into Thursday's price action. But obviously it is, a doji, what we call a shooter in the strat world. So it does set up the 1, 2 up, 2 down on Monday, right? So, if Monday's price goes below Friday's price, number one, we look to close the gap, but that triggers the 1, 2 up, 2 down. And the magnitude for that move is not the low of the 1, but the low of the candle to the left of the 1. So again, that's where we're looking at possibly poking through this fib extension and making that broadening formation on the 4 hour, which would really only be a higher low on the 1 day, right? And frankly, we can go all the way down here to 32 before we would make a lower low on the day. So even if we made this lower low on the day, it would still be considered a broadening formation, because you would have like high to higher high, and then the low here down to whatever the low would be down here, and again we've just got another broadening formation. So again, we don't get into the predicting business. We just like to present both sides of the equation and show, yes, we are in this uptrend, but there's plenty of room, and it's very reasonable to expect a pullback to make a higher low, and that could be what happens on Monday, right? So that's what we looked like from the intraday and the full day perspective on Friday. Let's zoom out and take a look at the week chart, and we can see again, let's get a cleaner one here. There we go. We can see, right, we're still working with this higher low. We've pushed up, obviously made a higher high from a candle structure standpoint, and not a lot of wick on the top of the candle. So very solid candle for the week. Just looking to continue to push up. We need that higher high. If we can get that higher high next week, then we've really locked in this higher low, because locked in this uptrend, right? Because as of right now, yes, we've made the higher low, but there's still room to make a lower high. And if we make that lower high, now we've got to look at, are we consolidating here? Is this going to be bullish consolidation, right? We had 11 weeks of consolidation back here from June to September. So does that turn into another situation like that, right? Here's the flag pull from that bull flag that we were talking about in April. There's the flag pull, there's the flag, right? We've already hit the 100 fib extension of that, and actually basically I got up to the 138.2. But that's what we're really looking for, is getting to that, at least that 138.2 fib extension, because that does give us a higher high on the week perspective, and we continue that uptrend instead of possibly sideways action. Or even if we do make that lower high on the week, if we push down and make a lower low, now we're talking about a downtrend on the week, right? So definitely don't want to see that if you're a bull. If you're a range trader, maybe you do want to see that, but just again, those are the possibilities. As of right now, even if we go 2 down on the week and even like close this gap here, as long as we make a higher low above this, basically the year flip for 2025, the 2813 level. That's been, such a big resistance level here in the range, and now major support level in this bounce. As long as we stay above that level, then we're okay from a range, even a ranging perspective, right? So that's what we've got from the week perspective. Let's look at the month, all right? And on the month, we're really close to putting in this or locking in this higher low, making November a higher low. But actually, we're not running out of time just yet. We've still got the full month left. So we'll see here in a second how many trading days are left. I think it's like 16 or 17 trading days left in December. So we do have enough time to go ahead and get that 2 up. Again, if that does trigger the 2 up, what it does is start the uptrend, especially if we make this higher high, which I don't see why we wouldn't. If we are able to trigger, the trigger and the magnitude or the target for that move are very close. So let's see, the trigger is 50.19 and the magnitude is 50.76. So if we couldn't make that, 60 cents or so, that would be tough. If we still went 2 up, but didn't quite reach magnitude. But at least we would have went 2 up, and then in January 26, it would be pretty easy to go 2 up and complete that strat, and then we're looking at pushing to reaching the magnitude for the strat on the quarter and the year. Let's look at the quarter. Right, so on the quarter, we have triggered, let's make this bigger. We have triggered the 1 combo 2 down, combo 2 up, right? That was triggered at this 36.15 level, and we are still in force because we're above that 36.15 level, and the magnitude of that move is not the high of the 1, it is the high of the candle to the left of the 1, so that's that 70.08 level, right? So just want to maintain above 36.15 from the quarter perspective, and we're still looking pretty good because we don't want to turn back down. We don't want to lock this in as a lower high because we are coming from a lower low on the quarter. If we lock in a lower high, that starts a downtrend, and now we look at are we going to fill these lower gaps that we left from the bounce in April, right? So just want to continue to see the push up, and as long as we're above 36.15, the magnitude for that move is 70.08. All right, that leads us to the year. Like I was talking about, we did go 1, 2 up, 2 down on the year, right? That was triggered, and we did almost reach magnitude, but we were able to reverse before we got to magnitude. So right now, looking like we're making a higher low on the year chart. And again, we just want to try and finish as close to the top of this candle as we can to give us the best chance of easily going 2 up at the start of January 26, triggering the 2 down, 2 up, which would then have the magnitude of 70.08, just like on the quarter. So things are looking good from on all time frames, really. Not really anything to complain about, even with the pullback that we've had, because on Thursday with that pullback, it really just set a higher low on the 4-hour. If we do get a further pullback on the day chart, again, we're just looking to set a higher low on the day chart as well. So nothing to really complain about from the short or long-term perspective. All right, so let's go ahead and take a look at our market makers expected move for the week of December 12th. And with that, we will go to the week chart. The 4-hour chart, and there we go. We can see that the market makers expected move high for the week is 51.53 and the low is 41.47. So how did we get that? Well, let's go to the options chain for, we want that. The options chain for SOXL on December 12th, for the week of December 12th, and using Thinkorswim. If you go to the options chain and you go over to the right-hand side, there is a $5 and basically 3-cent expected move, plus or minus. So from the close, 46.50, we're expected in the week of December 12th to move plus or minus $5.03 from that 46.50 level. So that's how we get these levels of 51.53 and 41.47, right? You just basically add $5.03 to 46.50 to get 51.53, and subtract $5.03 from 46.50 to get 41.47, right? And let's go ahead and go to our notes so we can see how we've got that charted out, and then also so we can zoom in here and set our 4-hour markers and triggers and targets for the upcoming day and week, right? So again, we talked about on Monday, December 8th, there will be 16 trading days left in 2025. Close price on Friday, December 5th, was 46.50. Again, we have a new week coming up, so we don't know what will flip it, green or red, but we do know that the month, quarter, and year are green, and these are the levels that it would take to flip those to red. We just talked about the market maker's expected move. So for the week of 12/8 through 12/12, again, we talked about is $5.03, giving us a range. If we look at the close price on Friday and use that plus or minus number, then we get a range of 51.53 to 41.47. All right. We also have a list of where our gaps are. Again, we had a very small gap that was created on Friday morning. So we did put that in there, but again, we know where all the gaps on the chart are. We talked about the market maker's expected move, and then we also talked about the proven and repeatable strategy that we use early on in the day. So let's go ahead and take a look at how things may look on Monday. All right, so on the chart we have the, let's make things bigger here. Actually, if we're gonna try and fit them all on, we've got to make, sorry about that. There we go. So on the chart we have, where's our overnight low? There it is. That's why we were trying to make things bigger. There we go. All right. So on the chart, we have our 4-hour levels, right? So the previous high a day, overnight high, previous low a day, overnight low. The only level that we don't have on the chart yet is the opening print level, or the first traded price of the day, because obviously we don't know what that's going to be. But let's say the little sell-off on Friday continues through the weekend and early morning hours. And let's get the right tool out. Let's say we open price below Friday's price action. Using this just as an example, because you don't always get your opening print in between previous low day and previous high day and overnight low and overnight high, right? So if we do get a push down, say we fill this gap overnight, well, gap fills overnight aren't really filled, right? That's you need your intraday price action to fill those, regular trading hours to fill those. But let's say it fills the gap and opens below where that gap was, and we push up and we fill that gap that was left from Friday, and say we reject there at previous low a day, or Friday's low a day, and we push back down, but then we get a higher low at or above this opening print level, then we want to look to get into calls. Right, the first target for calls with this type of setup wouldn't just be overnight high and previous high a day. Previous low a day would also be in there, right? It's a major point of inflection. So although we could get that higher low bounce, we could get a rejection here and just move sideways all day. So that is the first target. It's not a lot of magnitude there. So unless you've got a bunch of contracts, in the money. Would it really be worth unloading some there? Probably not, but we do have to identify that is a major level of inflection from an intraday perspective. But if we do get that higher low, we push through previous low a day, your next target will be overnight high and then previous high a day. All right, got to watch for this hourly downtrend line that we've got. If we do push down and push up, do we hit it, where it intersects with the last year's 50% level? Again, we don't put a whole lot of weight into downtrend and uptrend lines unless they intersect our major horizontal lines. So this is a point of interest for me, even if we do get a bounce. But if we also push down over the weekend and we open and we push down immediately at the beginning of the day and say maybe we bounce off of overnight low and push back up. Well, if we get a lower high at or below opening print, then we're going to look to get into puts. And the first target would be overnight low at that point, right? We don't have previous low, a day below overnight low, or even before overnight low, but under opening print. So at that point, from our proven strategy perspective, the main target would be overnight low. If you want, you can unload your whole position there, but at the same time, you could unload part of your position and take a look at the triggers and targets we have on like the 4-hour chart and the day chart. But that is the proven strategy, right? You want to look for higher lows at or above opening print to get into calls. You want to look for lower highs at or below opening print to get into puts. All right. That's for, early morning before a trend is really established, or, for a quick scalp if we're maybe chopping, or just an early entry into where the trend may be heading for the day, right? That's just how we can get those early entries and really get a majority of that move, right? Let's take a look at things from a more day trade perspective, right? Looking at the 4-hour chart, we do have to remember. There we go. Let's make things bigger for those on the phone, right? This 46.79 level, last year's 50% level, you can see again, we talked about how it's been resistance in the past, tried to find support here, but fell back through and was resistance. Looks like it's trying to be resistance again. So we do need to keep that in mind. We did get a 2 up, 2 down on the 4-hour chart. So although we did get this higher low, higher high, initially, we did get another 2 down. So we do need to watch out for what we talked about. Are we going to make a higher low, or is this going to turn into a bigger fall and create a broadening formation? We talk about the previous week's 50% level quite a bit every week. Because it is a level that usually is an indicator of how price will go for that week, right? Do we get a retest of that level? And if we retest that level, do we bounce, right? So first out of those questions is, do we retest that level? If we don't, if we just go 2 up on the week and just continue going up, then obviously, right, we're just pushing up. But if we do push down and retest that level, do we get a bounce, right? A bounce with some momentum back to the upside. If we get a good bounce, then that usually means we're still going to probably trend up for the week. It may be a slower trend, but at the very least, we're going to go retest last week's high and see if we can't continue to go 2 up on the week. If we hit this 50% level from last week and just kind of bounce and go back and forth, then the week is probably going to be choppy. We may push down on Tuesday and then push back up on Wednesday and push down on Thursday. That's generally how that would go. Now, if we go test this 50% of last week and just fall through it, then it looks like we would probably have a week of pullback, right? Now, at the same time, if we do break below last week's 50% level, the market makers don't expect price to go below 41.50 essentially. So again, it's not an end-all be-all. It doesn't mean price is going to bounce here and just go back in and try and test the highs, or even just bounce here and go sideways. It's 70% of the time price stays within that market maker's expected move, but that other 30% of the time, we break through it, and I could totally see us breaking through it, just because there's kind of thin structure from a day perspective, right? Just a whole bunch of 2 ups. We have not had a retest of this month's opening print level, this 39.59 level, this red M, that's the month's opening print. And we haven't tested last month's 50% level. That's this 39.16, this green dashed line. That does last month's 50% level does line up pretty well with the 78.6 fib of the April bull flag, right? So the 100% fib extension of the April bull flag is last week's 50% level. So you can see how those two, 43.76 and 39.16, if we do get some type of pullback, those would be my targets. If it's going to be a sustained pullback, just because those are just the major levels, right? Of course, 41.47 would come before that, but if we do break below 41.47, then I would expect we should get a bounce around that 39.16 level. But if we never get down to that, then I would expect any type of pullback to bounce off of this 43.76 level. 43 flat was the market maker's expected move low for Friday, so that lines up with the bottom of this bullish engulfing candle. We often talk about in the strat how once you get an engulfing candle or a 3, once you breach one side, if you come back into that 3 candle and break that 50% level, then most likely you're going to retest the bottom of that engulfing candle. So do we do that? Breaking through this 43.76 last week's 50% to maybe hit some stops if people have stops set at that level, just to wick to reach the end of this, breach the other side of this engulfing candle. Maybe we just wick through and then hammer back up. It's a possibility. But at the same time, you can see there's another 3 that we haven't breached the bottom side of that lines up with last month's 50%. So that's what I'm looking at as far as like possible pullback levels. Let's get a cleaner chart here, and you can kind of see it from the day perspective. Again, if we pull back that 39.59 level, that was lining up with last week's the fib extension from the bull flag, and this 39 level is what lines up with the last month's 50% level. So those you can see how they can be bounce points on the day chart, right? This is level of support here, bounce, 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 bounce. Yeah, we broke through a little bit for a look below, but it was a look below and fail at this point, and we've essentially bounced off that level as well. And then you can see here again, bounce, bounce, bounce. Kind of found support there, found support on it here. So that month flip or the 78.6 fib extension of the April 7th bull flag is a pretty good support area as well. All right. If we zoom out to the week, right? Oh, I'm sorry, we talked about that already. Let's set our triggers and targets. We talked about our market makers expected move. Let's set our triggers and targets. And talked about the proven strategy at the beginning of the day. All right, if we look at the 4-hour chart, again, we talked about how we had the 2 up, 2 down. If we do go below Friday's low in that first 4-hour candle of Monday, that triggers a 2 up combo 2 down, right? We already triggered the 2 up, 2 down, but it's a 2 up combo 2 down. And at that point, the magnitude for that move is this 2 down prior to the 2 up. So decent size move, right? That would take you from 46.30 down to 44.44, right? And, from as far as SOXL is concerned, basically a $2 move, it would net you a pretty good profit, right? We're talking about buying puts at the money or possibly in the money, especially if you've got multiple contracts. SOXL has very high beta for an ETF, and that equals out to be a high delta with a pretty low theta. So again, you get those contracts, because it's Monday, maybe you get that same week's contract, but we do suggest 1 week out, even if you're trying to scalp something that way. If something does go wrong, it affords you the ability to kind of recover and get out without having too much of a loss. You may not clock up profits quite as quickly, but there are ways to still get quick profit with a week out contract, right? At the money, in the money. That's really what we preach around here. So again, we could get this 2 up combo 2 down. Now if we go 2 up, then we're triggering this 2 down 2 up. Magnitude for that move would be the high of day on Friday, and then again we would see what happens when we approach that level. Do we push through it with some momentum? If we do, then we'll go ahead and look at the triggers and targets on the day chart. All right, let's get a little cleaner chart here. There we go. So again, we talked about at the beginning of the video, there is a 1 2 up 2 down setup possibility on the board. So if we do breach below Friday's low, that triggers a 1 2 up 2 down. And again, the magnitude for that move is not the low of the 1, but the candle to the left of the 1. So that is a pretty decent move. And because it would be a strat reversal, we do have a very clear entry, right? The low of Friday, and a very clear exit, which is the low of Thursday. So it makes things a little bit easier from that perspective. Now, if we go 2 up on the day, right, obviously we're breaking through this weekly broadening formation. It gives us a 2 up continuation. So very clear entry at Friday's high. but the exit is not quite as clear. You can look to your left to see previous points of inflection, right? So you can look at maybe this high, but that doesn't give you very much magnitude. In reality, it looks like 50.19 would be that target, right, for Monday if we do breach Friday's high. But again, we are dealing with these levels of resistance, right? Last year's 50% level and this weekly broadening formation. So it could be a hard fought battle to get up to that level. And we may not even get there on Monday. It may take a couple of days to get there. But just do keep in mind, what we have on the board. And even if we get this 1, 2 up, 2 down, we've got a lot of room to put in a higher low. So it wouldn't be the end of the world. Just play that downside and make your exit at the magnitude of that strat. Maybe leave a couple out there as runners for the further strat reversal. Market makers expected move low. Maybe we reach that or even test last month's 50%, this month's opening print level. So again, nothing to worry about. Just play it to the downside if it comes, and then even if you don't like playing downside, just wait for that bounce, that reversal signal, and jump on in at that point, and we'll look to continue that uptrend on the day chart. Let's take a look at our notes just for some hard numbers, right? We talked about from a scalping perspective, we're looking for our early morning perspective. We're looking for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. From just more of a pure day trade perspective, if looking at the 4-hour chart, if we do go to the downside, again, that triggers that 2 up, combo 2 down at 46.30. Magnitude for that move is 44.44. But we do have to, again, recognize we are in an uptrend. So there is a possibility that we don't reach magnitude for that reversal. We make the higher low, and we looked at 45.54 as a possible area for that reversal. Now, if we go to the upside, we would have a 2 down, 2 up on the 4-hour, triggering at 47.41, magnitude of 48.05. So not a lot of magnitude there, but we would have an extended target of 49.06. On the day chart, if we go to the downside, we talked about that would be a 1, 2 up, 2 down, triggering at 46.30. Magnitude for that move would be 43.15. Again, that's a pretty decent sized move in the face of an uptrend. So we do have 44.44, which is the magnitude of the 4-hour reversal as a possible bounce point on the day chart, right? If we don't go 2 down and we go 2 up on the day, just continue that 2 up pattern, 2 up continuation, that triggers at 48.05, and we've got targets of 49.06 and then 50.19, which is last month's high. Right now on the week chart, we have a situation where we could have a 2 up, 2 down. If that we do get that, it would trigger at 39.46. So we still got to pull back quite a ways before that would trigger. And the magnitude for that move is pretty large. Again, in the face of an uptrend, the magnitude is 32.05. So we did want to include a couple of intermediate targets on the way to that magnitude in case it doesn't fully reach magnitude of that reversal. We can see 36.45 or 34.17 as either possible bounce points or points where price could start to go sideways. All right, so if we go to the upside instead, that triggers a 2 up, 2 up, or the combo 2 down, 2 up, which triggers at 48.05, has a magnitude of 50.19 and 50.76, right? So the 2 up, 2 up, the combo 2 down, combo 2 up, first magnitude would be 50.19, second magnitude would be 50.76, and from there we would have extended targets of 52.95, 54.42, and 56.92. All right. We talked about on the month, we are still an inside candle, but looking to breach that upside, triggering the 2 down, 2 up. If we do reach that 50.19 level, that triggers that 2 down, 2 up that we talked about that doesn't have a whole lot of magnitude, right? 50.76 is the magnitude for that move. So if we do reach that, we have our extended targets here. If we do go 2 down on the month, that would trigger a 2 up combo 2 down. I don't think that that's going to happen. We've got quite a ways to go to reach it, but we do have that on the board, and we'll talk more about it if we do see some more pullback. Just because, again, we're not in the prediction business. We're just ready for price action, whichever direction it moves, right? And then not lastly, but again, on the quarter, we did reach magnitude for that 2 down, combo 2 up. That was that 36.15 level, which then triggered the 1 combo 2 down, combo 2 up. We did reach the 48.79 target previously and the 50. But because we dropped back below them, we've got them back on as targets. If we reach those, then we've also got our other intermediate targets on the way up to that full magnitude of 70.08, right? Again, this could turn around at any time because we are coming from a lower low on the quarter perspective. We do want to have these intermediate targets because if we make that lower high and really start to turn things around and we're looking at having a possible downtrend on the quarter, we want to have these levels of where we could reverse on there, right? But again, we're looking real good. One combo two down, combo two up on the quarter with a magnitude of 70.08. That's where we're looking to meet. And again, we talked about on the year chart, we did trigger the 1, 2 up, 2 down, but we were able to, make a higher low so far, hammer up. I keep saying so far because, the year isn't over. So technically we could go back down and test the magnitude of the strat. But again, we've only got 16 trading days left in the year. So don't think that's going to happen at this point. Just looking to continue to close at the top of the candle for the year, giving us the best opportunity to go 2 up next year, which would then trigger a 2 down, 2 up on the year, which would also have this 70.08 magnitude. And, we'd be rocking and rolling for 2026. So there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. I really tried to pack in as much information as I could without taking up too much time. But as always, I do look for you guys' comments. So if you've got any pointers, tips, tricks, think I mumbled on a little too long in certain segments, let me know. If you want me to touch on other things a little bit deeper, let me know as well. But those are your triggers and targets. Hope everybody enjoyed it. We'll go ahead and end the video like we normally do. This is a weekend video, so if you're watching this Saturday or Sunday, we hope, again, that this was some good information for you. Hope that you get some good rest tonight or this weekend and wake up refreshed on Monday, ready to trade. If you're not watching this till Monday morning, we hope you had a good, refreshing weekend and you woke up ready to trade this morning. And we look forward to getting out there and trading with you.